So hello and welcome to the Assay. Today I'm here with Rachel Ziemba, Senior Advisor to Horizon Engage. So Rachel, thanks so much for joining us here today.
My pleasure to be with you, Amy.
Always great to be able to catch up. For our audience who might not know too much about you, do you think you can start with a bit of an introduction and share a little bit about kind of your experience in the industry?
Sure. So I've been working in the industry or on especially the macroeconomic and geopolitics of energy and mining for about 20 years now, from the perspective as part of my work on emerging economies, on macro and geopolitical risks of the energy sector, sort of writ large, but also looking at just generally key commodity markets. So that means a lot of time looking at the ways in which governments are trying to reshape markets, either to restrict access to certain commodities or to try to build new supply chains. So it's been a busy and interesting time with lots of new tools in the toolkit and lots of ways in which I think investors are sort of struggling to adjust and take advantage of this new reality.
Absolutely. I mean, it does seem like there is I would expect that you'd be quite busy right now with kind of everything that's happening in the world. So, as you kind of mentioned, your work is focused on this kind of intersection of politics, economics, and energy. So, maybe we could talk about some of the biggest trends that you see happening globally right now with regards to kind of both the mining and energy industries.
Yeah, so I think the big thing, that I'm watching a lot is this question mark of how to grapple with the big thing I'm watching is how the US and other countries are adjusting to China's key role, particularly in the mining side of things in the energy space. Of course, traditional fossil fuels, oil and gas is a different story. But if we think about lithium, if we think about all the battery metals, if we think about the rare earths used in the defense industrial base, this is really a story where the raw materials may be scattered around the world, but China really is locked up the processing, capabilities. And so we are seeing a dynamic where both there is a willingness from China to weaponize these supply chains, and then sort of real fits and starts from the US, from countries in Europe, other friends to try to develop new supply chains. And so it's a bit inconsistent there. So I think there's a recognition of how important these mining supply chains are and mineral supply chains all the way through to end users. But we sort of have an inconsistency. The other trend I see that I think is really important is a lot of countries that have the raw materials want to move up the value chain. They want to get more value from processing. They don't want to just be a place where the raw material is extracted and then it's taken away. They want to build out not just processing, but also the manufacturing that uses these technologies. So I think and I think that's a natural thing that economists would have recommended to them. But so I think that the two things are happening at the same time, which is this demand for technology transfer and building out of these supply chains, but also a recognition from the US, from Europe, and other countries that they would like to be also bringing back some of this production at home. So this is, I think, a dynamic where there's a lot of scope and different involvement of government interests. But at the same time, as we were just talking about a couple weeks ago in New York at the one-to-one mining conference, there's still a question mark of persistent or challenges attracting persistent capital, right? And so there's intent to build up the supply chain, but it's a little more difficult to actually do it in practice.
Absolutely. And I want to get into the investment side in a little bit, but just going back to your point on kind of this regionalization of supply chains, and you've got new regulations coming out of the US. You're seeing a big
Mm,
drive really across Africa as well, to kind of
sure.
build that full metals value chain. What are some of the global impacts that you see coming out of kind of these regionalized supply chains? And, is this going to create like bottlenecks in the metal supply? How do we kind of mitigate those impacts?
Yeah, and I think we're sort of in a window, particularly with some commodities like lithium, where there is a bit of or there's definitely a current supply demand mismatch, right? And that's a current challenge versus what future demand might look like. And we know in mining, these things go in, long cycles. That decisions to build a mine, to start processing take years, not months. In some countries, they take decades to get approved. In countries like Canada, in countries like the United States, average time of bringing a new mine to fruition tends to be at a decade sort of like level. So I think it depends on the mineral and the mineral supply chain, whether there are gluts or shortages. But I think that's an issue. And then all of this is happening at the same time that we also have more creative trade tools being used. I mean, as we speak, and I imagine at the time that you'll be seeing this video, that there'll be even different news about where trade tariffs and rules are in place. But historically, a lot of the mining and processed commodities were not subject to extensive tariffs. But we now live in a reality where they are part of trade taxes that also lead, I think, to distortions. So, in terms of regionalization, I think at this point there is still more intention to build out these supply chains than maybe action in that way. I think in Africa, you're right. There's a lot of players vying, for example, to build out technology and infrastructure along the Libido corridor. We've seen DRC be a country that both China and the US have courted. As we speak, the US just signed some sort of new metal agreement. It's hard to tell exactly what the details are. That's the other challenge I think that a lot of people are facing right now, is that there's also a lot of deals out there, whether it's investment or otherwise from governments, that are a little more opaque. And so harder to know exactly what the incentives are. So I expect to see more regionalization, but I also think that more of it at this point has been focused on the two ends of the mining supply chains, one on the mining side and getting access to the raw materials, and the other on trying to develop and build out, say, battery manufacturing or the end user point. And that in that middle point, right, which really has to be tailored to what the end users are needed, is where I think the gaps are outside of China, for example. The other thing I think I'll be watching on a regionalization perspective, both in the Middle East and Africa, is also what happens on the recycling side. Right, we've seen China be such an active player in sort of recycling critical minerals. We see Africa, places like Nigeria being a hub for recycling of base metals, a variety of other attributes. And so the question mark will be whether that can be levered in that way. So intentions there. In terms of regionalizing supply chains in the Middle East, or rather the Middle East and Africa, I've really been watching what the United Arab Emirates is doing, and especially in some of the African countries. They've been active investors, first on the mining side, and now more slowly on the processing side. And then in Asia, of course, we've seen more development and regionalization, but that's where I would say Chinese firms have probably been in the lead. Some of the other projects, for example, have, in jurisdictions like Australia and elsewhere, have been a little more challenged by this temporal price, sort of price drop.
So yeah, looking at kind of the investment side of things,
Mhm.
as you mentioned, we're seeing kind of this growing cohort of investors coming out of the Middle East, looking, in places like Dubai, Abu Dhabi, you know, and they're specifically looking to get into the metals and mining industry, diversify away from oil and gas as well. So, do you see this kind of as a growing trend? Where do you see these investors really placing their investment, their money right now?
Yeah, so definitely key area of focus for the UAE, as you mentioned, Saudi Arabia also, but from a bit of a different perspective. I think in Saudi Arabia's context, it's more about diversifying domestic, sort of domestic production, and you have company or the big entity Ma'aden partnering and very, yes, looking at investments and partnerships abroad, but their focus is much more domestic. So if they're investing abroad, they're looking for techniques, they're looking for technology transfer, but the goal is much more sort of asking this question about whether the geological resources in Saudi Arabia could allow them to be a more general commodity superpower. They also have an interest in building out all the way to electric vehicle supply chains. Again, this is a domestic economic growth story, and I would say it mirrors what groups like the Public Investment Fund, Saudi Arabia Sovereign Wealth Fund, is involved with in other sectors, right? They are sort of using the capital, using the assets on the balance sheet, leveraging them, and trying to develop. So that's something where there's clearly interest, um, but remains to be seen how economic some of those, those projects are. Now, the UAE has through both government-linked investors, through investor bodies that are linked to the royal family, right? Because this is the part of the ecosystem here. You have funds that are that whose goal is is whose goals are linked to the sort of public wealth and those belonging to those who rule. And we've also seen private actors as well, but be interested in metals and mining, as I say, especially in Africa, but more generally, until recently. And that sort of mirrored some of the countries where the UAE was signing trade and investment partnership agreements, where there were close state to state links. But we've seen that expanding. And more recently, the one of the things I'm watching is that they're moving more into processing opportunities rather than just buying into mines that are looking for new investments. Another thing that watched, going beyond the region, but I think is very relevant, is um, ideas and potential joint ventures with the U.S., for example, in an investment that the Emirates aluminum company has been making in Oklahoma, looking on the mining and critical mineral side and processing side. This is part of Oklahoma trying to become a critical mineral player, not just an oil and gas player, but also an agreement that was signed on the sidelines of President Trump's recent visit to the region to develop some of the supply chains for some of the critical minerals that China has been restricting. Now we're still at idea phase, perhaps here, and we'll see how that goes. But I think the intention and interest is there. From the Washington perspective, I know there's been a lot of hope that the fact that these GCC investors could be actors that U.S. government, U.S. industry could partner with in Africa. I think there's still some tensions there, including the fact that from the UAE perspective, they're probably less concerned about Chinese dominance than the US is. And the US, I think, even has some choices about which parts of the supply chain, can be built in different areas. So this is definitely a growing area, and I would see it as part of not just diversifying from energy, but within energy. At the same time, I think we see companies like ADNOC investing in natural gas, of which they're not a major producer abroad. So it's partly about building out a vertical integrated supply chain and trying to look at what are going to be the energy commodities of the future and positioning themselves well. And as I say, especially for the populous countries in the region, this push for job creation and quality jobs is very much key. And it also ties into the interest for AI and the sort of power sources and power storage needs that are embedded in any goals now. We might get more and more efficient in how data centers work and training works over time, but for now, these are pretty power intensive stories. So there's a lot of critical minerals needed for battery storage facilities that are important parts of an energy mix.
It does really seem like there's, a lot of the focus is really on kind of just future proofing companies and the industry and kind of future energy overall.
I think that's right. And I've been tracking the Middle East from a macroeconomic perspective for quite a while now, and for most of that time, there's been a lot of talk about diversifying from oil and gas or from oil. What's new now, and it's still very much a focus, and some countries are further along than others, either by necessity or it's also somewhat easier to do if you have saved more and have a small population to distribute it amongst. But the thing that I hear now more and more when I'm in Dubai or Abu Dhabi or Doha or elsewhere is not just a diversifying into jobs that are currently active, but trying to, as you say, future proofing, look for the opportunities that are going to be coming down the pipeline in ways that we may not know exactly what those jobs are going to look like, but and that's where I think technology literacy and other dynamics are important. Some of it is also a quality of jobs point in countries as we have in the region where the per capita income ranges, but tends to be higher than in a number of African countries and a number of developing Asian economies. These are not elements where low value add manufacturing is not sort of not the core goal, because it would be very hard to compete on price. Or rather, if it's low value added manufacturing, then probably it would be robots that would be doing the assembly, which is something when we think kind of across the board. Overall, I just think in the region, we're also seeing this interest, that we see elsewhere, of using technology to better assess old geological information. Also, globally, try to reuse and leverage brownfield sites, and to sort of get more using technology to extract better.
Yes. Yeah, absolutely. And so, I mean, we've already kind of talked about this future proofing the industry and kind of implementing more technology in the way that we operate. So I thought maybe you could just talk about, close it off with a few kind of key trends that you foresee arising in the coming years. What should we be on the lookout for?
Yeah, I think we should be on the lookout for new joint investment structures. I'm particularly watching closely to see what opportunities might come out of both things like the G7 action plan on critical minerals, including the development of more standard-based financial markets for critical minerals. So it's not something that would be unique sort of to the Middle East. Of course, there aren't Middle Eastern countries in the G7, but to the extent that new financial liquidity, financial markets for trading and hedging are developed, this could be beneficial across the industry as producers might be trying to hedge their offtake, or sort of their offtake exposure and the like. I'm also interested in sort of new partnerships that we're seeing out of groups like the Quad, who recently announced some joint both stockpiling and other dynamics. Now, stockpiling alone doesn't solve the problem. It might solve problems for the short term if you have the right metals and the right components on hand. But if there is a consistent commitment to building out and supporting these new long-term supply chains, that could be beneficial. The challenge is, of course, is always in some jurisdiction that production cycles are often longer than political cycles. So one of the benefits that some investors might look to, or for when they're looking for partnerships, would be to say that some of the countries in the Middle East with somewhat longer planning cycles and less of the short-term political cycles might be more committed for the longer term. That is still an open question, given that these countries also need to show financial and economic returns. So that's, I think, something I'd be watching. And the other one will be we'll see how much of an opportunity it poses, but also where the U.S. government lands on this sort of both the incentive and the tariff obstacle side of the critical mineral sectoral tariffs and other sort of spaces there, that could create some opportunities for foreign investors in the United States, as opposed and maybe even some for technology transfer. The implementation of that will be complicated by what said investors' links to China are. But there may be distortions in the market, but also opportunities that come from that.
Absolutely. It does seem like I mean, it's a difficult time, but also quite exciting with kind of lots of new opportunities coming up, especially out of the Middle East. But those were all the questions that I had for you today, Rachel. So I really want to thank you for joining us here today on the Assay, and we'll catch up soon again in New York.
Great. Thank you so much, Amy.
Thank you.